Just going to run through mainly the stimulus measures this evening, and if anyone's got any questions around tax or accounting, happy to answer those as well. I work for Kelly Partners Inner West. I head up the team at our Rozelle office and have been there for a few years now, but overall I've been practicing as an accountant for over 15 years. So yeah, if you've got any questions, just feel free to jump in at any point. The more interactive it is, probably the better. And also, yeah, we can just run through the slides anyway if you don't have any questions, or you feel more comfortable, bring that up at the end of the session. But basically, yeah, just wanted to run through the COVID-19 stimulus measures from the government that have been released. I'm sure everyone's been hearing about these on the news or have been able to personally utilise some of the measures, which has been great. There's some federal measures and there's some state measures, and every state's quite different. So I've basically just made this slide more from a New South Wales point of view. But you know, there's definitely ways that we can assist if you do have queries and you're from a different state. So I'll just jump straight into it. So we've got our COVID-19 little visual here that I'll try and make most of our discussions around. So effectively the government has put a stimulus on offer of about $320 billion. And that's kind of increased and decreased. I think they've done a few calculations wrong along the way. But mainly what I think you've probably been hearing about is the job seeker and the JobKeeper payments, which is, you know, the job seeker payments has been administered through Centrelink. So if you've had, you know, any issues with your employment or, you know, you've been made redundant, then you can go through Centrelink to get those types of benefits. So that's just down here where it's got support for employees. So that's $550 per fortnight. Another area that they've actually, I guess, given some benefits around is in the same kind of area. It's basically just to act as a wage supplement. So you've got the job seeker, which is through Centrelink, and then that's basically if you've lost your job altogether, being, you know, and you have no income coming in. Whereas if you do still have a business, you can apply for JobKeeper, which is through the ATO. And a lot of accountants have been quite busy, I'm sure, the last few months in trying to help clients to you know, get that stimulus if they're, you know, eligible for it. It does allow for $750 for any eligible recipients. So basically, you know, it's really just to supplement people's wages and to allow the JobKeeper is more for employers and businesses to be able to keep, you know, the employees in business, in their business, and keep them connected to the business, even if they might not be running the business during COVID. So for example, you know, your local beautician that may have closed down, she's still able to pay her employee, you know, on a weekly basis, even though, you know, there's no business being operated. Now, with all these restrictions slowly being lifted, the beauty of the JobKeeper is that the way that it works is that there's, if you see a 30% drop in your turnover as a business, you could be eligible for the JobKeeper. So I might just jump into a little bit more detail around the JobKeeper, because that is one of the main initiatives that we've seen from the government. So there's a little bit more wording around here, but I guess the main thing to consider here is that as a normal, you know, as a not-for-profit, if you had a 15% downturn, then you would, you know, that would be something that you could apply for through the ATO. But the main one that we've been seeing with the small businesses is the 30% drop. So it applies to sole traders, companies, trusts. It doesn't really matter what structure you're running your business from. You can be eligible even if you don't necessarily employ people. So that's what's called a business participant. So if you're actively involved in a business and you've never paid yourself a wage for one reason or another, so sole traders, for example, they would be eligible for this as well. So the main criteria to be eligible is that your GST turnover is being reduced by 30%. So the way that that's measured is either April last year to April this year, March from last year to this year, whether you've seen a 30% drop, or they would look at it over the quarter of June. But I think the most important thing with this is that, you know, whilst a lot of businesses might not have thought that they were eligible, we have gone through a lot of clients' accounts over again and realised that there are some extra tests that the ATO released later on in the piece, and they've been known as the alternative tests. And basically what that's done is it's kind of allowed for a lot more businesses, different types of structures, different setups. Say, for example, they might employ their employees from one company and then they run the business from another company. All those types of more complicated structures have been actually eligible. And it's not just purely looking at events that happened last year to this year, because there's what they've called the alternative tests, which actually has allowed more people into the program. I think it's more of an inclusive program. They're trying to, you know, help as many businesses as possible during this period, just so, you know, the economy, you know, can stay afloat, and also so that businesses aren't overburdened with debt by the end of this. You know, 6 to 12 months down the track is where they're anticipating where we will see most of the impact of these closures. So it is quite, yeah, it's quite an interesting one. It's very detailed, probably a lot more detailed and more complicated than what we had anticipated. They did have to rush all this legislation through. So I think the government's done a great job in doing that. But yeah, unfortunately, it can be quite complicated in areas. So I would recommend, if you have looked at your financials and thought, yeah, it looks like I have had a drop, definitely get it checked again and continue monitoring it, because if you are eligible, say in June, you could register for that, you know, in July and receive payments to the end of September potentially. And there is some discussion about maybe even extending that past September. So yeah, as a business or as a business owner, I would definitely, or an employer, I would definitely suggest that you do look at your financials, have a financial person, an accountant, your financial advisor, look at that with you, because there are other tests that they can definitely help you achieve the result that you know, to get this extra funding to help your business through this tough time, and to, I guess, help you keep connected with your employees as well. That's probably the main idea of it. So yeah, if anyone's got questions during the session, please just feel free to ask them. But yeah, JobKeeper's definitely been one of the main areas that this stimulus package has been delivered. For some clients that we've had where JobKeeper, they haven't been eligible, we have suggested that they do check with the job seeker side of it whether they are eligible, because there are little finicky things of making sure that you've got lodged tax returns, lodged BASs. You don't necessarily have to be registered for GST, so your GST turnover doesn't really, they use the concept of GST turnover in trying to work out whether you've had a drop in income, but you don't have to be GST registered. You could be a relatively small business, you know, turning over, you know, 30 or 40,000 and still be eligible. So that's one of the main initiatives there. And we've been able to help a lot of clients in that area with the JobKeeper. We're currently managing quite a few of these for our clients. The ongoing requirement is that you do have to lodge monthly, you know, reports with the ATO to let them know, you know, what's your income been, what's your downturn, what's your, you know, I guess your estimated income going to be for the next month. So there is that ongoing reporting obligation to the ATO. And a lot of people, I think, have found it easier to kind of say, oh, help, you know, to their accountants, please help me with this. You know, I have no idea what I'm doing. And we've also had a few clients just do it themselves as well, so which has been great. So yeah, so JobKeeper is one of the main initiatives, and that, yeah, like I said, it should be extended potentially. They're even talking about maybe extending it in certain areas like the arts and the entertainment area has been heavily impacted by these closures.
Yeah.
So they are potentially looking at extending it past September for those certain industries, or they may offer some sort of different type of, you know, I guess incentive. Did anyone have any questions around that?
I'm wondering, can you hear me?
Yes, this is Catherine.
Sorry, it's Catherine. Just with regarding the JobKeeper, if your income, because we're doing the monthly reporting,
Yes.
if your income increases, I've read a couple of scenarios where how is this going to impact us ongoing? Like my business fell off 90%. However, I have taken measures and it's steadily improving again.
That's great.
And all the things that I'm sort of using my JobKeeper money to stimulate my business,
yes,
kind of working. Is that going to, because I'm trying to future-proof the business, not just get through this, you know?
Exactly.
And so I guess am I going to be impacted down the track by improving my business? Will I have to pay it back?
Oh, look, I think a lot of people are I guess a little bit scared because the government is giving all these handouts, and you know, I wouldn't see any issue, you know, as long as you've met the eligibility criteria. You know, you're in the program. So for example, we've had clients that in April their numbers dropped dramatically, and then, you know, back in May they were kind of back to their normal numbers because they weren't an industry that was heavily impacted.
Right.
And they're still eligible effectively to the end of September. That's kind of how it stands now, but we are uncertain as to how the government will use the data that they have. I wouldn't be concerned if I were you, you know, in terms of whether they're going to ask for it back. As long as you've met that eligibility criteria. You shouldn't have any issues. We do think there'll probably be a fair bit of auditing around this area in the next 6 to 12 months, because you know, I think there was some news story about a business in Melbourne that had distorted their figures to try and get into the program and all this crazy scenarios. But I'd imagine, you know, that was quite a high profile one. But yeah, we imagine there will be some audit around this area. But, you know, as long as you've got all, you know, all your ducks in a line, I wouldn't be concerned, Catherine. If you've got any specific questions, happy to, you know.
Thank you, Michelle.
But I think the main thing is being like people kind of saying, oh, but hang on a minute, like, how come I'm getting it next month? My income's back up again. As soon as you're in the program, effectively, you know, you're in the program
you're eligible
till the end of it. Till the end of September. I guess the only thing is that we can't necessarily backdate the registration now. So, for example, for some people that may have seen a drop in May and they didn't register by the 15th of June, so you've got to register by the 15th of the next month if you've seen a drop. They might not be able to access that now. They probably only be able to access June onwards. So hopefully that's answered your query.
No, thank you. That's very helpful.
Okay. And just another thing to note, so the JobKeeper, if anyone's got queries about that, feel free to ask them. But the main thing that's changed, I guess, with the job seeker is that they have, it's kind of a measure that's always been there. This is the one that the $550 through Centrelink, that's always been there, but a lot of people couldn't access it because their partner's income threshold was a lot lower. Whereas they've lifted those restrictions a fair bit now, and your partner's income, you know, if it's 80,000, then you can still receive the payment if you've got no income coming in. But I think a lot of people have that. There's again a lot of little bits and pieces there within Centrelink that could come unstuck. So it's probably something that you need to kind of manage quite carefully and closely with Centrelink. In that regard, in terms of job seeker. And I mean, the biggest thing as well for employees has been the free childcare for the 6 months for all the mums out there with kids in childcare. I think that's coming to an end now. I think it's the 6th or 7th of July. But yeah, it has been a nice little reprieve.
Yeah.
And probably helped, you know, the childcare businesses that were, you know, from people kind of pulling their kids out and things like that. So there's no real talk about that being extended, but, you know, I guess it's kind of, we are in uncharted territory now. It's really hard to know how things will progress with the situation and with, you know, with the virus spreading and whether more closures will happen.
Yes.
Yeah, time will tell how we go with that. But yeah, so that's mainly the measures around support for, I guess, employees. And, you know, I guess the main other thing to consider around that is also the early release of super. That we've been getting a lot of queries around that. So look, with the accessing of super, I'll just jump into a bit more detail with that. You can access 10,000 before 1 July and 10,000 after 1 July. The eligibility criteria is that, you know, in order for you to apply, you need to be, any of these requirements need to be met. So only one of them. So basically unemployed, so, you know, made redundant or, you know, fired or whatever has happened, stood down, and I'm not, you know, eligible probably for the JobKeeper as well. But it would just depend on the circumstances. You could still be potentially getting JobKeeper and maybe they've dropped your hours down. So that's the other one. So if your working hours were reduced by 20% or more, so you could still be working, but if your hours were reduced by 20% or more, then, you know, as a sole trader or as an employee, you could actually access the super early. I guess that, you know, the main way that you can access that is through your MyGov account. A lot of people kind of calling their super funds and trying to do it through there. It's probably not a bad idea if you don't have access yet on your MyGov. But it is one of those areas that, you know, I definitely recommend people to probably talk to their financial advisors before accessing that money and jumping in so quickly to access it, because it can have big impacts on your retirement in the future. And, you know, as it is, you know, we don't really pay enough into super. Like, I think 9.5% is definitely not enough in terms of what's required to be input. So especially, you know, considering, you know, a lot of people don't probably think about their retirement until later on down the track, when, you know, I guess it's a lot harder to get money in, and there's a lot more restrictions now on trying to get money into super. But it's definitely a measure there that's it's a positive one, because I think what it's done is, for a lot of the younger generation, it's kind of made them more aware of what their super is, and hang on a minute, that, you know, that is my money. What am I doing with it? Am I managing it? And so on and so forth. So yeah, so you can access up to 20,000. You would need to access the first 10,000 before 30 June. And then from 1 July to 24th of September, you'd have to make the application for the second 10,000. So that would be through the MyGov account, and you can access that from your retail fund. If you had a self-managed super fund, you'd have to access it differently. So that's the main measure there with in terms of accessing of super. The other measures that they've put in place around super as well is they have, you know, if you're in pension mode within your superannuation account, you don't have to withdraw as much. So that's quite another detailed area to go into, but it's just something to be aware of, that they've basically halved the amount that you have to take for certain types of pensions. So yeah, if you're in that situation, again, talk to your financial advisor and get some advice around that. For example, we've had some clients contacting us and saying, oh, can we reduce how much we're taking out of super? Because super has been heavily impacted by this global financial, I mean, it's an economic crisis, it's a financial crisis, it's a pandemic, it's probably everything rolled into one, really. So that pretty much covers everything there for the support for employees. I think, you know, one of the other areas that I'd like to also focus on is there's a lot of state-based grants that businesses can access as well. And that's support more from the states and also, you know, the territory, Northern Territory. So within New South Wales, the main one that has been released is this $10,000 small business grant. And what the main idea of that is really for businesses that have been heavily impacted. So you would have had to have seen a 75% or more drop in your revenue to be able to access this over a 2-week period since the 30th of March. So for a lot of businesses, say between the 30th of March and the 13th of April, would have seen a huge drop in their revenue, even if they weren't forced to close down, because I think everyone just kind of retreated, went indoors, wasn't sure about what was happening. So a lot of businesses have been able to access this grant, and it has been extended to the 30th of June. So originally the cutoff date to apply for that was the 1st of June, but it now has been extended to the 30th of June. The eligibility criteria is a little bit limiting in the sense that it's not really for sole traders unless you employ people in your business. So I think that's kind of been a little bit of the area that's, it's been a bit hit and miss there in that sense, because there's probably been a lot of sole traders that just aren't able to access this type of grant. But we may see some more of this type of stuff coming out, post 1 July. So the main criteria is that you would have to have employees between 1 and 19 employees and a turnover of more than 75,000. So you would need to be registered for GST effectively. And the way that they're kind of checking that is you have to submit your last business activity statement to them when you're trying to apply for this grant. The other thing is if you're a big employer, so if you employ people and you pay wages of more than 900,000, there's what's called payroll tax that you have to pay. So if you pay payroll tax, you unfortunately you don't have access to this grant as well. And one of the biggest areas here is that you've had to have an ABN as at the 1st of March. That's also applicable with the JobKeeper. Again, there's so many detailed tests within the JobKeeper that you have to go through, but that is one of them as well. In this instance, you have to be based in New South Wales and, again, employed staff at the 1st of March and being heavily impacted, so 75% decline in turnover. The thing with the grant is you can choose how much you need to access at any point. So it's $0 to $10,000. And they're really, they're testing the period is like a 0 to 2 week period, anytime between the 30th of March to the 30th of June. So if you've seen a drop of 2 weeks, a drop in turnover of, more than 75% over a 2-week period, and they're saying compared to a comparable period. So what they mean with that is, say, for example, for businesses that are less than 12 months old, they can't obviously compare April this year to April last year. So what they're saying is, give us a 2-week period that would be comparable. So it might be sometime in February or January. And if you've seen a 75% or more drop there, then you should be able to access these. The main thing with this is that they are asking for an accountant's letter in order to submit the application. And the application does need to be done by the employer directly. So, if anyone's got any questions, I'm happy to send the links in order to do that. But you will need an accountant's letter to verify that drop. They're basically just making sure that, these businesses have seen that drop. And I guess we do expect there may be some audit activity around this, because you have to show how you have used that expenditure. So the term that they use is you have to use the money on unavoidable costs. So they do list on the website what they deem to be unavoidable costs. So utilities, legal costs, financial advice, those types of areas. Areas of workers' compensation is one where you can use it on as well. So that there is a few different areas in there that you can use it for. And we have been able to successfully access that for many clients, which has been great. And it's been a great help, in particular where they've been closed for quite a period of time, heavily impacted by those restricted movement orders. There is talk around this area, actually, within New South Wales, that there will be what's called a new recovery grant. and which was announced just recently from the 1st of July of $3,000. So that one's a little bit different in that the decline that you would have had to see would have just been 30% or more. The eligibility criteria, I believe, is roughly the same, but once they will release a little bit more information come the 1st of July, so we'll be able to check that and see whether businesses are eligible. But it will be through Service New South Wales that you apply for that as well. And it's just really trying to help businesses with the costs associated with safely reopening and scaling up the business. So that's a new grant that should be released from the 1st of July. I think it's in anticipation of the $10,000 grant ending on the 30th of June. So we've only really roughly got 6 days to apply for that. And then, the next grant is this $3,000 grant. But there is a lot of discussion. I would definitely recommend as a small business, if you can't access these types of grants, to, have a chat or reach out to your local council, because there are a lot of business grants available even from within local councils that are being released as well. And some of them are industry specific, but others, it does just really depend on this COVID situation and, how heavily impacted you've been. So that's on the grants front. So really more as, I guess, employers or business owners able to access those. And then we can jump back into our lovely little germ drawing here. And I think, look, that the other thing to consider there as well is there are, with the support from state government, there's also a lot of people have kind of reached out and said, oh, look, I'm a landlord, get no relief whatsoever with what's going on. I've got my tenant asking me for rent reductions, etc. But there has been some, leniency there where landlords can, I guess if they've got a loan on the property, contact their bank, ask them to either, put a pause on the repayments or, that's really actually mainly the pause on the repayments to help with this during this time. There's also been I guess a wavering of fees and charges for small businesses like stamp duty and a few other little things like that. But the other main thing is the land tax that, if as a landlord you've extended some leniency in repayment of rents and waverings of rents and things like that, then you may be eligible also for a land tax exemption. So that's more at a state-based level as well. So I guess, yeah, look, I think, look, in the coming 6 to 12 months, I do think that we will see a lot more of the grants being released at a state and local level as well, just to help support businesses in particular. Once I think JobKeeper's over, the businesses are definitely going to need these types of things to, I guess, keep them afloat. One of the other main things that probably a lot of people have heard about is the pay-as-you-go cash relief for employers. So basically what that is that's administered by the ATO. So this is the PAYG relief, and it effectively, if you're paying a wage or wages to your employees, you can access that, and it's purely just through lodgements of your business activity statement or your installment activity statement, and they're basically just refunding the tax that you've paid up to $100,000 directly to the employers, which is great. So that one is mainly through the March quarter BAS, the June quarter BAS, and they're releasing it over a staggered period of 6 months. So if you think that you're eligible for that, or you're not sure, definitely get in contact with us or with your accountants. And what we found is some people there's been a little bit of a delay in the ATO releasing these funds for one reason or another. So sometimes it might just require a phone call to the ATO to release those funds, but it really is only if you have employees and those employees were, registered to the business. as at the, I think it's the 12th of March. Yeah. So you had to have had an ABN as at the 12th of March, and you also had to have be active in the business as at the 12th of March. So depending on when you lodge your BAS, like whether it's quarterly or monthly, that is how it kind of releases. And the maximum benefit that you can get is 20,000. And then what we've seen is that the minimum benefit will be about 20,000. So even if you only paid, say, 10,000 in wages, you might actually get the full benefit of the 20,000.
Sweet. Catherine, did you have a question?
I do have just one question. It's about the land tax.
Yep.
So you said exemption, but is that, I'm assuming that you'd still have to pay your land tax at some stage.
Yes, look, with the land tax,
More a relief, and you have to pay it later when you can afford it.
Look, they are having some permanent waiver there as well. There is a permanent, like, I think it just depends on how much you've offered. I think there's a maximum threshold there. I'm not 100% off the top of my head what that percentage is. But yeah, if you've offered relief to your tenant, then the land tax.
What about if they left?
Oh, really?
They moved out. Yeah, that's an issue for me.
Yeah, look, I'd have to look into those specific.
You just have to contact the land tax office or something.
Yeah, there's definitely like a separate area on their website, and I'm happy to send you the link to that, where you can go through the eligibility for that. So yeah. Just get in contact with me, Catherine, and I can.
Okay, Michelle. Yeah, thank you.
No problem. Yeah, look, it may or may not apply to you. Again, it's all in the devil's in the detail with all this stuff.
Yeah.
Yeah, it's been, a lot of businesses have been quite fortunate in that they've been eligible for almost everything, and there's, been a lot of businesses that have fallen short, unfortunately, or, within the land tax area.
Yeah.
So yeah, I can definitely look at that with you, no problem. I think the other area that I also just wanted to focus on as well is that, if you are a business that has apprentices, you can also apply for this 50% subsidy on apprentices' wages for 9 months. But if you are claiming the JobKeeper, you can't do both. It's one or the other. So what we've found is a lot of clients have probably, been eligible for JobKeeper, so they've just done the JobKeeper as opposed to going down that subsidy, the 50% subsidy. I think the other thing to be conscious of now is the ATO has been really lenient with offering extended payment terms. If you do carry some debt with the ATO, I'll definitely recommend giving them a call and trying to negotiate extended payment terms, interest write-offs if you have been accumulating interest on any outstanding debts with them. They are offering interest-free periods as well, where normally they might charge interest on a debt that you owe to them. They're offering interest-free periods of up to 12 months is what we've seen. So they have been quite lenient. I don't know how long that's going to last. So what we've recommended is that get in contact with the ATO or have your accountant call the ATO on your behalf and negotiate a plan for you, in particular post-COVID. So they don't normally offer these type of extended payment arrangements. So that's been quite a helpful thing as well. They've also offered extensions on lodgements and things like that too. So that's been great. I think one of the other areas as well that I'd like to kind of draw our attention to is, there has been I think a big issue with a lot of people that are paying rent. So business owners that are paying rent in commercial tenancies. So there was, the government did take a while to release this, but there was a code of conduct that was released, and a lot of people have actually been successful in negotiating rental relief, more for commercial tenancies. So that's been quite helpful for a lot of clients that, carry a lot of rent and have to pay a lot of rent, and, unfortunately just had to close, and so their income virtually came to nil. But the main thing is that you didn't have to close to be able to access this. The real thing with this is kind of a negotiation piece between the landlord and the tenant. So that's quite a important thing to understand, is that, you know, it really is a negotiation that needs to take place. They may ask to see financials. They may ask to understand what kind of a downturn that you've had. They may ask for an accountant's letter as well to justify whether you have had that downturn, or, you know, but you are eligible for this if you are eligible for the JobKeeper payments. So if you've seen a 30% revenue drop, then, you know, you can apply these commercial codes of conduct. So there's roughly about 14 principles that they've released as part of this, and it's really just for people to interact with one another, you know, in a I guess in a more humane way. Because I think what a lot of people were seeing before was, you know, unfortunately, you know, as a landlord, you know, for a lot of people that's their business and that's their, you know, livelihood. So, you know, it's kind of a double-edged sword in a sense. And you know, a lot of people might not necessarily have loans with the bank, so there was no deferral to ask for, but maybe they wait for that rent every month to live off as well. So there's definitely two sides to the story, but I think this has definitely helped people. So what it's offered is that, you know, whatever you've declined by, so say you've dropped by 50%, then 50% of, so 50% of that is waived altogether, and then 50% of that decline is deferred over the life of the lease. So that's it's kind of, I guess, a middle ground, if you could call it that, for a lot of people. So it's been, you know, quite a big area in all of this. And I think, you know, if you're having trouble negotiating with your landlords, definitely get in touch with your accountants or your financial advisors, because they might be able to help, you know, with that. And also on the flip side, again, as I mentioned, there is some land tax relief and things like that for landlords as well. So something to consider. So I'll just jump back in here. I think we've covered the majority of everything that is on offer. You know, in line with what the ATO is doing, you've also got banks that are offering deferrals and, you know, freezes on things. I think a lot of the banks have actually specifically just not even notified. They've notified clients via an email, but just put freezes on things for them. You know, if you do have the cash flow available, you know, I think it's something to consider with your financial advisor and all your circumstances, because, you know, at the end of the day, interest still does accrue on these debts. But if you can't pay them, then it's definitely an alternative to just put a freeze on it and wait to see what's going to happen. But I wouldn't just wait and see. I definitely would get in contact with your accountant or your financial advisor just to make sure that you are, you know, I mean, we've been actively kind of working with our clients to make sure they've got cash flows in place, to understand really how is this COVID-19 impacting their business, and how they're going to come out of this. I think one of the biggest areas is that, you know, they've talked about the government offering these new loans of up to 250,000, but the reality is that the government and the banks are only offering these loans to really stable businesses prior to COVID-19, you know, happening. And there's probably a lot of businesses that were kind of struggling before that, or maybe they didn't have a clean bill of health, you know, in terms of the business before that. So they really haven't even been able to access those funds. We've had a lot of clients that just haven't been able to access that whatsoever. But then there's also been a lot that have been, so that's quite a good little, I guess, cash flow arrangement for them, where they can, you know, have it gives them a little bit of extra money to be able to pay bills and things whilst business is a little bit slower. But around that, I guess, is also there's been new rules imposed where if you've been, you know, if due to COVID you have been forced into what's, you know, a financially distressing situation with your business, or personally, as a bankruptcy kind of case, they've increased these creditor statutory demands. So normally what happens is, you know, I guess a creditor, so if you owe someone money, they could kind of issue a demand on you to pay that to them in 21 days. So that's kind of been extended to 6 months now, which is kind of great for people, because what I guess they understand is that a lot of people will struggle to pay bills on time. And then they've also extended it from a $2,000 limit to a $20,000 limit. So, you know, I guess it's good. It's a good relief for businesses in that sense. It's a relief for directors as well from their personal liability for trading whilst insolvent. So that's an area where normally, you know, if you continue trading and you can't pay your debts, then they may come back onto the director and say, well, you were trading while you were insolvent, you continue to rack up debts. Whereas there's kind of been a 6-month reprieve on that. I think, you know, it's definitely something to consider. You know, if you're a business that's been impacted, don't assume that, you know, I think on the flip side of this is, you know, if you're waiting for money to come in the door, then it's definitely something that you want to be pursuing and chasing to the best of your ability. And, you know, I think a lot of businesses kind of fail in that area, in the sense that they might get their pricing right, but they never really follow up on the terms of their invoices. So say you issue an invoice and you know, expect payment in 7 days. In these circumstances, that I'd imagine that would get extended. And, you know, I think, you know, as a business, you've just got to be careful, because you can continue to extend these terms, but if you don't chase the money, you know, you can go broke in these situations. I mean, in particular, post the JobKeeper and post all these stimulus packages being rolled out, it's definitely something to keep an eye on. Like, I think most business owners really probably don't have that discipline around getting paid, because they're so busy running the business that they forget, you know, oh, hang on a minute, I'll get the pricing right, but I won't chase up that person that owes me the money that, you know, that they said they'd pay me, you know, 2 weeks ago. So I think really, you know, you need to develop a plan around how you're going to chase up that money from the, you know, from the people that owe you that money. Do you need to change your payment terms or your contracts with them? Maybe ask for an upfront payment. There's a lot of different ways that you could potentially, you know, work around this, because as much as, you know, everyone, you know, doesn't want to be in that situation, unfortunately, I think, you know, going over the next 6 to 12, 18 months and further, we may see that a lot of businesses will continue to struggle post all of this stimulus and, you know, go belly up, unfortunately. So I think the biggest thing is, you know, have a plan. Make sure that you're chasing up those creditors or the people that owe you, you know, everyone who owes you money. You know, if you chase them up via a phone call in 7 to 8 days, what happens next? You know, do you jump on you know, what is the plan to try and get that money back off of them? Maybe hold off on delivering the final product, you know, until you've received some form of payment, because, you know, that's the only way that you're going to kind of, I guess, protect your livelihood and your income. I guess the number one priority during this time is to make sure that your business survives. So, and if you can survive, then, you know, long term you should be able to thrive. So if you need to change your mindset now to make sure you do the things now to help you to be able to thrive into the future. So another area that we've been focusing on with clients is making sure you're doing some forecasting, and also looking at your expenses, the most largest expenses to your smallest expenses, and making sure you understand how much, you know, it costs to run your business on a weekly, monthly, annual basis. Yeah, so that's definitely a big area to be conscious of around this time, cash flow, and, you know, how you're going to get paid and how you can also minimize those expenses within the business, or the unnecessary costs that might be in there at the moment. So did anyone have any questions around anything to do with the stimulus specifically, or? I think that kind of really wraps up mostly everything. The other big thing is, if you do have some spare money lying around and you were looking to make an investment in assets, that they have increased that instant asset write-off from 30,000 to 150,000. So that's been quite a significant increase. They've also extended that to the 31st of December as well. So that's it's a tax relief, really. I guess just be conscious of if it's something that you need, great. It could be a good time to do that purchase, but obviously you need to assess your options and make sure that your cash flow can handle it. Yeah. I think the only other thing that I thought I'd like to, if no one had any other questions, I guess around the stimulus side of things, is during this time as well, sometimes it's a good time to reflect on the business, be able to set up some processes in the business to help you, long term to achieve your goals that you're trying to achieve. But the other thing to consider is it a good time to restructure, and is it a good time to protect your assets? Sometimes, in the initial instance, a lot of people might carry on their business in the same entity where they carry a lot of assets. So it's definitely something, or a discussion point that we're having with our clients is, if you're pivoting your business, for example, we've had a lot of clients that are pivoting their businesses, and it might be a completely different type of business that they've kind of gone into. So is it time to set up a new structure, or move from a more simple structure such as a sole trader to being a company or a trust? And there's definitely significant, benefits in doing that, but we also have to weigh up the costs as well, and whether, it's necessary to do. But it's definitely something to talk to your accountant and financial advisor about around that area. So I definitely, recommend it's time to consider that. Another thing that I thought I'd run through with everyone as well was just a couple of pointers in terms of end of year financial planning. We've kind of run through this with our clients every year, roughly around this time, usually around March, April, but it's probably been pushed back due to JobKeeper. But there's definitely some benefits. If you have had a really good year in terms of the income that you've made, great time for you to look at maybe, whether to help minimize tax, you could potentially prepay some of your expenses, so subscriptions and things like that you able actually to get a deduction once you've actually paid them. So, and also, interest, if you've got interest on loans, if you've got the money to prepay it, that's definitely an option for you to do. Another suggestion that we've made here is to review any loans that you might have, in particular with companies where if you've taken a lot of money out of the company personally and not paid yourself a wage, that's what we consider to be a Division 7A loan. So you might want to look at ways to repay that, whether you pay yourself a wage or pay yourself a dividend, however you're structured. So that's definitely one thing to consider as well. Also, in terms of reviewing your loans, interest rates are all-time low at the moment. So, if you're looking at your home loan or your investment property loan, if you don't have a 2 or 3 in front of it, I would definitely talk to a mortgage broker. We can introduce you to a mortgage broker within Kelly Partners as well. So, it's definitely a great time to assess that and check what your options are with that. Take advantage of the $150,000 asset write-off, which we just spoke about. Reviewing debtors is a big thing, because I think in this current climate, if you feel like you have, someone owes you money and they haven't paid you for quite a bit of time, there may be some merit in writing that off, if you really believe that you won't be getting paid, and that way you're not actually paying tax on money that you're not going to receive. So that's another big area. Review any of the assets that you currently have on whether we can write them off completely. As a small business entity, there's some extra concessions around that. So definitely, most accountants are across that. So if you have any concerns around that, I would definitely recommend reviewing your depreciation schedules. Topping up super, look, it might be slightly too late for that, but definitely get in contact with your superannuation fund. There's some really great concessions around that. You can carry forward some of your concessions, and talk to your financial advisor to make sure you know you're not hitting any limits or caps there. But you know, if your balance is less than 400, if your balance is less than 500,000, you can actually carry forward any contributions you didn't make from the prior year and claim a tax deduction for them as well. So, you know, I would definitely recommend talking to a financial advisor about that, because that's, you know, it can be a great way to reduce your tax. But obviously, again, need to make sure it's in line with you know, having enough cash flow and things like that. Paying your employer's super prior to 30 June means you can get the deduction in this current financial year. If you paid in July, you will still get a deduction, but you just won't get it till next year. So that's another thing. If you have any assets that you're looking to sell, check whether, you know, what your taxable income is going to be this year compared to next year. So say if you're looking at selling shares or a property, you know, whether it's worth selling it this side of the financial year or holding off to next year. That's definitely a consideration as well. That's more to do with delaying of the income as well. So if you think that, you know, you've got a high taxable income this financial year for June 2020, you might hold off on selling that asset till July. But again, you have to take into consideration the commercial consideration there as well. Like if you're going to make more money from selling it now, or there's always going to be a taxing point at some point, but just, you know, weigh up all your options there. And a structure review. So that was just kind of what we briefly spoke about before. So that, I mean, that's, you know, kind of some end of financial year pointers to go through. I'm happy to send you these checklists. I think we briefly touched on the idea of being in control of your financial universe, and at Kelly Partners, we believe in having a structured, I guess, way of moving forward in life and in business. So, you know, we have built systems and processes to assist our clients in moving forward and having certainty in, I guess, at this point in time, very uncertain and unprecedented times. You know, we do go through what we call, in helping our clients kind of gain control of what, you know, their financial universe. We have gone through, we do go through a folder system with our clients where, you know, we take them, I guess, from, you know, cradle to grave, making sure that, you know, we've covered all the bases and understand, for example, what your net asset position might be. Because I think for a lot of people, they don't really consider these types of things. So they might not look at their net asset position. And if you haven't measured something, it is really difficult to grow it. So I think whether it might be to reduce debt or, you know, grow assets, or where to invest things. So we do have our folder system that we go through our clients with, where we just go through their personal affairs, business affairs, wealth, which, you know, is, you know, I guess leads into your super type thing, you know, what's your retirement plan. And of course, estate planning is a big thing. I think, you know, a lot of the times people just need someone to project manage these things for them, or to know that they're all in one spot. I think it's astronomical, a statistic, but 50% of Australians actually die without a will. So it's quite a scary thing.
Wow, that's amazing.
Yeah, I know. It's an alarming statistic. But
So what was the percentage again, Michelle?
It was 50%.
Oh, wow.
Look, it may even be higher, but that was the statistic that I had read. So yeah, it's quite an alarming statistic to think that you know, everyone works so hard to get to where they are, and they might not have a will in place, for example. So for a lot of the times, you know, I think people just need, you know, a lot of our clients, for example, we just help them through that process. You know, I'm not an estate planning specialist, but I know that I can introduce them to someone who is, and then having, and then making sure that someone that, you know, is your trusted financial advisor has that for you. And, you know, everyone's aware of where that's stored is probably another important thing, that it's not, you know, hiding under someone's bed or, you know, having access to that. So yeah, there's just a few different things that we like to do for our clients throughout the year. And that's kind of, it's not, I guess, being an accountant, a lot of people traditionally feel like, oh, my accountant just does my tax return and, you know, that's all they look after. But I think it's really important that people go to their accountants and get more out of what, you know, what they're currently getting, I guess. You want, you know, forward-looking advice to help you, I guess, reach your goals in the future, and, you know that you have that trusted advisor that you can turn to ask the questions that you need to ask. So, yeah, I guess I just wanted to touch on that, and, you know, making sure that people understand that, you know, there is help out there. I think a lot of people everyone has the best intentions of getting to things, but they might not necessarily kind of get to them fast enough, or, you know, might not know the avenue to achieve their goals, I guess. So, I mean, if anyone's got any questions, happy to take them now. But I think the best way that I could help you is if you want to get in touch with me, give me a call, send me an email. You know, if there's a Kelly Partners office that's close by, feel free to contact them as well. But, you know, it's a great team that would be here to support you if you've got any questions. We've also got our checklist. So we've got, during this COVID time, we've developed some amazing checklists for our clients, not just for business, but also for their personal side of things. And also there's that end of financial year tips and checklists as well. So I'm happy to circulate those after this meeting. And, you know, if you need any help or you have any questions, please reach out.
Thank you. Very clear and helpful. It's great.
Thank you.
Yeah, thanks, Michelle. There's some fantastic tips. Yeah, they were fantastic. Thank you so much.
You're welcome.
And I'm sure the group will appreciate them, and feel free to send me, you know, the checklist or things, and or the 10 ways to minimise your taxes, and I can pop them in the group if you like. And I think for anyone, if anyone's got any questions or anything like that, please feel free to pop them in the group. The group is there for us, like, or for small business owners to ask questions and to get advice. And there's people in the group that are experts in their field that can offer some advice. Or maybe somebody's been in the same position as you before. So we're at nearly 2,500 members in the group. So there's a lot, yeah. So there's a lot of people there that should be able to help out if anyone's got any questions.
Yeah, I think there's been some great commentary around all of this COVID stuff on the group too. It's been really good and very timely.
Yeah, it's been great.
All
right, well, thank you so much, Michelle. Have a good evening, and everybody else, and we'll see you next time.
Thanks, everyone. Have a great night.
Michelle.
Thanks, Michelle.
Thanks. Bye.
Bye.